Hello, game traders, and good morning, evening, afternoon, wherever you are in the world. Hope everyone is doing well. This is Sankit here, and we are gathered for this ECB press conference that's coming up at about 8:45 a.m. Eastern Standard Time. So we still get about 20, 25 minutes here. So let's get into our market analysis. We'll be taking a look at what's really moving the markets, the aftermath of the FOMC that we had yesterday, and preparing what we can get from this ECB news. So let's jump right into markets. As always, if you have any questions, any pairs that you want me to take a look at, just type in the chat box and we'll take it as we go. So let's get into it. So starting with the ECB, we already had the ECB. Let's go into Forex Factory. Let's take a look at what we have so far. So they raised rates to 25 basis point, which was as expected. So no real surprises out of there. When it comes to the statement, let's see how the aftermath is. And you can see the aftermath is the initial price action is to the downside in the euro. So I think this is where I want to highlight that this market environment that we have is a lot different than last year. Remember last year we were getting these rate hikes and we were getting these runs, and it was a whole different environment. And here we are with this. I mean, we had the FOMC yesterday. Let's go back to yesterday. Let's take a look at the dollar. The FOMC yesterday, and look what happened. This was the initial move, and we actually did go lower overnight. So it is clear that these rate hikes are not really a deciding factor on where the currency is going, and the reason why everything is priced in. Market is doing a great job at just pricing things ahead of time. So when the news come, it's not a big surprise. Everything was expected. You know, we can take a look at, for example, in the Fed fund futures yesterday, there was a 99% chance for markets to raise rates. So that was already priced in. So no surprise. You can see that going into the next meetings, September, November, you can see there's only 20 to 28% chance for rates to even go higher. Most of the chances are for rates to stay. So the markets are already pricing that ahead, and same thing's happening with all major central banks. So Euro news is not a big news today. It's just because that rate hike was already priced in. So where are the nuggets that we need to find? And that's in the statement and in the press conference. If you recall yesterday with the US FOMC, I must say they were not as dovish as you would think they would have been. They are all keeping the door open for further rate hikes if the inflation gets out of hand. And we have talked about how the second half of the year will be challenging for the inflation to really drop. And here's the reason why. If we take a look at the CPI numbers, we talk about the base effect. We had huge numbers last year. So if you take a look at where the biggest peak was, so the biggest peak was right here in July. So from the July to a July, you see inflation coming down quite a bit. But once that kind of goes in the rear view mirror, I mean, take a look at August, September, October. I mean, we started to have a bit of a steep and fall off in this number, which means that we likely to stay around this 30% range for a little bit longer. We are not expecting that to go down to a 2% range as the Fed is expected. So I think the inflation battle is a lot difficult in the second half of the year than it has been the first half of the year due to the base effect. So same thing we are seeing with other central banks. They're if you look at the inflation, they have come down, but then now we'll see what happens in the second half this year once the big numbers kind of get out of the way. So here we are. That's why the statement is a little bit cautious. They are open to interpretation. We could see if they want to raise rates. If things get worse, we'll cut rates. Cutting rates is no longer the topic. That was a big topic earlier this year, but that's no longer the topic. Nobody expecting to for any central bank to cut rates, but it's more about holding rates, and that's one of the reasons why we are not really seeing things sort of fall off the cliff. We are not really seeing any sort of changes. We probably see a policy hold. And again, if as we got it from the Fed yesterday, it's all data dependent. So you will see that. I mean, I would like you to kind of keep an eye on this countdown for this future expectation, because it's all data dependent. We are going to have some data coming out just in a short while. So we are in the same boat as we have been for the most part of the year. We are data dependent. We'll see what happens. Let's go to the schedule today. We are looking at advanced GDP out of the US. We're looking at some of the durable core numbers out of the US. So again, those numbers will affect the dollar. But that's really where we are at. And you will see, let's go back to this tool here. You'll see if this numbers start to rise, then the expectation is that, yes, they will be going for another rate hike. And that's something will get priced in to the US dollar. Right now, it's not getting priced in because there's no expectation. So keep an eye on that one. This is the story that's been playing out throughout this year. So let's go back to the euro. So euro is falling. And as we've looked at other central banks, these rate hikes hasn't resulted into a further appreciation of the currency. Now, let's take a look at the daily chart where these currencies are. On a daily chart, you can see that this is sitting at a very good lofty levels here at the resistance. And we had a very terrible PMIs earlier this week. So with these terrible PMI numbers, we saw this drop in the euro. And now you can see it's going sideways. So where do I like? I still like euro more on a pullback. I mean, right now, again, like I said, I'm not seeing great strength. I'm not really loving this whole buying on this news. I think we get a little bit more selling on the news. So I do like a little bit euro on the downside. So we'll be taking a look at both the euro, both the positive and the negative case scenario. If we draw the lines, and this is what I like to do, is I don't want to get in when prices are still undecided. We want to get in when the prices are actually moving certain levels, because that's where we will get some sort of continuation. So right now, we are just falling back in this range that we established earlier this week. So that's where we are. We'll see which side does it break. Oh, excuse me. So this is the side we'll take. But right now, you can see that this, again, percentage-wise, it's only down 0.11%. It's not a screaming buy, and it's not a screaming sell. But we'll be prepared for both case scenario. Like I said, on the central banks, we are not really seeing that bullishness coming after the fact. On the comparison, I mean, take a look at Swiss franc, and I want to highlight what's going on with the euro Swiss franc. As amazed I am, take a look at what's going on. And euro is definitely more weaker compared to the Swiss franc, and this thing just continue to fall. I mean, look at that last year. We look at this fall that we had here. We got a bit of appreciation here, and we're just falling right back lower now. So again, the level of support, we're actually getting back to exactly the level way we reversed last year, and we're getting back to that level. So it's clear that euro is underperforming. Swiss franc has been a much better play compared to the euro, based on that relative strength and weakness. And if you ask me the reason why, I have no idea. I mean, we have seen a lot of changes taking place from the central banks, but the Swiss franc has not budged. I mean, look at this. This has been the best currency to hold since 2022, since the run happened. I mean, look at that. Look at the move that happened with the dollar. We rallied and we just fell apart. Swiss franc, we rallied and just continue to rally. So there's definitely that relative strength there, which again, who knows what's causing it. I mean, if we talk about the yield differential, this is a lower yield currency. If we take a look at the nature of the currency, this is more of a safe haven currency. And if you take a look at the markets, markets has nothing but gone up. So, we should have seen safe haven currency come down. That's not the case, but that's what we have in front of us. So let's take a look at the possible trade that we can take a look at if you really want to enter on the news. I mean, the euro dollar, I know this thing had a bit of a drop. If I really want to get in, I have to see this sort of fall around these levels. I mean, we'll see. We will be getting GDP numbers coming out of the US. We'll see if that costs or durable goods number. We'll see if that will cause any sort of effect here. But you can see we have completely erased some of the overnight profits that we've seen. So we got a resistance right here, and we got the lower end right here. So I mean, I do like the short here. I just have to wait for that news to come out. But again, that would be the first one I'll be taking a look at. I mean, I know dollar was kind of weak overnight, but look what's happening in the dollar this morning. It's picking up. So there's a lot of back and forth. And I think this is where it's not a great environment for anybody that's trading long-term trends for certain currencies, because things are just going back and forth. It's not moving in a linear fashion as it was last year. So let's take a look at euro dollar. I mean, sitting at the lows of that candle, we don't want to get short right here, right now. But let's see what kind of price action we get here. We'll go through our relative strength and weakness analysis, and we have another 15 minutes to go through. But let's go through this U.S. numbers here and see what kind of price action we get here. All right, so it's 8:30, and so far, initial price action is stronger on the U.S. dollar. So you can see this thing is start to fall again. So there's a lot of back and forth, like I said, with some of these currencies. Let's go over with the Euro USD. I mean, it is falling. Let's take a look at dollar Swiss franc. Let's take a look at that. I mean, that's reversing here. This is another interesting one. Look at both the European currencies. Let's get rid of this. So, I mean, so look at the pattern that we have here is that we had a big fall in Euro Swiss franc, had a bit of a rally, try to fall again, made it a little bit of a new low, and look at the wick. If this wick stays where it is and reverses a little bit, I don't mind looking at this as a reversal play. Same thing goes with the Euro USD. I don't mind taking a look at this as a reversal play. Look at the daily chart. I mean, we are at 110.80. I mean, this thing is reversing very nicely here. So it's all a matter of where you get in and how long you want to hold that trade for. Of course, on a shorter term time frame, things a little bit look murky here. But I like that the reversal candle on a 4-hour chart. We have these levels that we are drawn here, that 110.70 down to 110.38. I like if it breaks this level. I would love to be part of that reversal. And I like the fact that the dollar Swiss franc also is making that reversal here right off the support. So those are a little bit encouraging signs over there. So that's what I'll be taking a look at. Let me go through and see if there's any other questions here related to this. So Saf's asking question, not related to euro, but please could you check Kiwi dollar long on a daily chart for me? That chart looks interesting. All right, let's take a look at that. Before we take a look at Kiwi dollar, I want to take a look at Kiwi basket first, because I like to take a look at baskets before I jump into these. Into that. All right, let's actually go back to euro dollar. I mean, I want to see if I can get short somewhere here. I mean, the best way to get into these positions right now is when you just take a half a position size. So the price action and continue to fall. Look at that, beautiful price action. Either we can wait for the ECB press conference, or we can just jump in. So this is the chart that I really like this on. I like this on a 4-hour longer term chart. So 4-hour, 12-hour, even a daily chart. I like that on daily because look at that reversal that we're getting. So instead of making a higher high and a higher low, now we are making a lower high and a lower low. So this thing, again, if you want to trade this on a daily chart, I love this below that 110.36 area. This is a level we need to see this break on a daily chart. Same thing with dollar Swiss franc. I mean, look at that big fall we had. I'm liking that reversal. If it ends over here, we get a nice little reversal candle. I would like to play this a little bit on the upside off from this area. So those are the ones. Like I said, everybody has their own trading plans. You can decide which time frame you want to trade it on, how long you want to hold it for. But as far as the direction goes, that's what I really like here. So let's get into Kiwi here. So before we jump into the Kiwi dollar, let's see what the currency basket is doing. What is the Kiwi doing right now? This is a very difficult currency to trade. Traditionally we take a look at the market sentiment, risk on or risk off sentiment, and usually those are good guiding factors to guide some of these growth currencies. But as you can see, those are no longer those are not the case. We are not. I mean, overlay this to the equity markets. the growth currencies has not done anything this year. I mean, take a look at the Aussie. Aussie gone sideways. Take a look at the Kiwi. Kiwi's gone sideways. Well, if you want to compare that to the equity markets, look, equity markets are up 20-30% this year. So clearly, there's not a correlation there. So if I'm trading the Kiwi, realize that I'm trading a very difficult price action, especially if you're trading on the daily chart. On a daily chart, what do you want? You want this on a daily chart. You want a higher high, moving, continuing higher, use the exponential moving average, and just guide your stop. That's what you need. And this is, again, I'm looking at a currency basket, not even a currency pair. Now, take a look at this. This currency is not consistent at all. So there are times where it's done well, and there are times when it's just done poorly, and you just have to swing it based on that. So on a daily chart, I don't love it. Now, let's take a look at the dollar chart. So look at the dollar chart. And I think Corey covered this yesterday. Like, dollar is not going anywhere either. And as we talked about where we are with the central banks, I mean, I don't see a whole lot of downside in the dollar. I think all these currencies likely to stick where they are. Look at the DXY. I mean, some things have corrected already quite substantially, but then once interest rate holds, I mean, take a look at that. I mean, I would be more short on the dollar if it really breaks lower. But if you just take a look at the currency basket of the dollar, it's sideways. It's sideways. It has it. Some days were great, some days were not. I mean, take a look at the daily chart. Great opportunity here, and even a good opportunity on the bounce. So there's things that move back and forth. So I don't want to be committed to that. So let's go into the Kiwi dollar. So on a Kiwi dollar on a daily chart, I don't see a whole lot. I mean, so here we are. We got a resistance right here. We got a support right here. And that's what we have. This is a range bound currency. So if you're looking on a daily chart, just realize that you're more like in the middle of the range. And you're more likely to get frustrated with this currency because of that inconsistency. So you want something that's consistent. Let me give you an example of Swiss franc. Let's take a look at Kiwi Swiss franc, which is the opposite. Kiwi Swiss franc on the short side. I mean, this is where there's more consistency. This is where it has been a better currency to trade it directionally. As much as we want to disagree with it, personally speaking, like, look at that. This thing is down since last year. This thing is down almost 18%. So of course, when you take a look at that, you don't want to be chasing something here, but that's the trade that's been working. So, that's where the consistency is. There hasn't really been a major reversal. And same thing if you go with dollar Swiss franc. If you really like dollar short, the dollar Swiss franc has been a great play. I mean, since last year, just right here, we have gone from that level to 15% down. That's substantial move. As you can see, we've gone period consolidation. Look at the big break here. We've got a little bear rally here. This thing has been more on that consistent basis. So Kiwi is not the currency that I find as consistent. Can the Kiwi really catch some traction? Well, I would need to see that just how we saw that last year. I mean, take a look at this price action. We were below the exponential moving average, 13-day moving average. We turn around and we sort of move. That's a directional play. Right now, if you look at the moving average, this is sideways. So I don't love the Kiwi long here or Kiwi dollar long. I think this is not a easy play. I think you should stick with. In a shorter term, look at last night. It had a good move. So I can take advantage of these moves, but I have to get out once that move is done because there's no guarantee or consistency in that move. There's another request for Euro Aussie. Let's take a look at that. So right now Euro is clearly falling, and Euro Aussie. I'm going to start with a daily chart. So there's a big level of resistance here, and there's a strong level of support right here. So we're getting closer to the support here, 162.49. The price is sitting at about 163.17. So if the euro weakens, is the Aussie it's a good play. And then if you look at the price action, this is also sideways. Look at the price action here. This was a great price action, but like right now, it's going from June 29 to almost a month of consolidation. If it does break lower, I would like to be in that play. But at the same time, the question is that a euro play or is that an Aussie play? So let's say with the Aussie currency basket. So you can see the Aussie currency basket has done relatively well, but this is also sideways. So I would love to see a breakout on the basket in order for me to get excited about going long the Aussie, because we can then get, the next level of resistance is the high that we saw back in June. So same thing, Euro Aussie. If you are trading on the daily chart, then you need a daily close below the 162.40 area to get short. But for now, it's consolidation. But if you take a look at shorter term opportunity, there has been a nice runs up and it runs down. I mean, we got a nice little breakdown here. We got a nice little rally here. We got a big breakdown over here. We got a nice rally here. This is what we are getting. And we are in this peak summer trading environment. So we are expected to see more of these consolidation until after the Labor Day, when things become more volatile. Right now, volatility is low. Let me take a look at, just not in the FX market, but take a look at in the equity markets, the VIX. The VIX is sitting at the lowest level that we have had, I mean, since before the COVID, 2019. Look at that. Volatility is very low across the board, which means that there's better chances to see some consolidation in certain currencies that we're looking at. All right. So Kiwi dollar, like I said, I like it more on the range. I mean, there are runs happening. Look at the run here that happened, and then it just fell apart. So I like this on a shorter term time frame, not as much on the long term time frame. If you are seeing a good direction, then I think those charts looks good on a longer term time frame instead of short term time frame. But yeah, the longer term time frame on Aussie and Kiwi don't look promising. And again, it's a matter of time. Like if the market has been running and those currencies were not able to catch a bid, what happens when the sentiment turns a negative? Are those currencies likely to take a bigger hit? Same thing. A lot of currencies are in the same boat. Canadian dollar. Let's take a look at that. I mean, this thing has been all over the place, right? On a daily chart. I mean, this thing has been more directional here, pull back, now a rally here. Look at that. We're getting a bit of a reversal here. So again, but this is also a little bit performing around what the US dollar is doing as well. So there's a bit of a correlation there. So a lot of back and forth. That's what I would say. So this is the market environment. Look at the Kiwi CAD is just turning lower here. So this is a market environment that you want to be flexible. You want to just get in and out. But this is not a great environment to be in on a daily chart and hold it for longer periods, because this is, you'll see something work out for a few days and then that totally turns around. All right. And I think that's the sort of a environment here. We're not seeing a whole lot of reversals happening either. I would love to see, just like how last year, if you look at last year, the great opportunities came when dollar made a big reversal to the downside. Look at Kiwi made a big reversal to the upside. This is where, look at the pound make a big reversal to the upside. Euro made a big reversal. So there were great opportunities when we saw that major reversals. Right now, I don't see any reversals taking place in these markets. If you look at Swiss franc, staying how it is, dollar staying sideways. There's nothing major taking place. Even the yen staying the same course. Aussie, Kiwi staying in the same course. So not a whole lot of change. You just have to work with what's in front of you, which there's decent opportunities that we can have around these events. If you notice that, look at, if I was trading the euro against the US dollar, there's definitely a decent risk to reward that I can get in a shorter term without committing longer term. But realize that when the policy shifts, that's where the big movements take place. And second half of the year looks interesting to me because the inflation conversation comes back on the table. All right, so we are a couple of minutes away. If you have any other questions, just go ahead and type in the chat box. We'll take it as we go. But yeah, that's my outlook on the markets right now. All right, let's take a look at a couple other trades. Yeah, even Aussie Kiwi going sideways. So yeah, not a great trend trading right now. So euro dollar is the only one that I really like on a reversal. This is again prior resistance. It's now the support, which is at about 110.66. So potentially we can look at an opportunity if it breaks that support at about 110.66, which is right here. Maybe I'll do a sell stop here. So let's go ahead and do that. I'm just going to put a sell stop right here at about 110.64 or 110.60 if I want to give a little bit of room. And I'll leg in once it breaks that 130. It's a 110.36 area. So I'm just going to do that on my trader workstation on a separate screen. That's what I'm planning to do and see if that would work. But again, I'm giving a little bit more room for this trade and see if that works. So, and what about my stop? Well, initially you can see there's not a whole lot. Stop has to go up about 111.44. So taking a little bit of a wider stop, but again, that's really where, I mean, we can go shorter term, but I think I'll take a look at the highs of that candle. I'll get a smaller position size, but that's really what I like here on a further break. And again, if this can turn around on a daily chart, I think this is something I can hold for a little bit longer as well. All right, we're sitting up at 110.76. So we see the press conference already started. You know how these press conferences work. You know, we saw that FOMC yesterday. Like, you know, the comments are roll out and things can move and change anytime. Usually, big movements happen on a surprise. If there is no surprise, we don't expect a big movement. So, so far, I must say that we have seen less surprises from these central banks. There has, you know, a lot of the movements, we haven't seen this crazy sort of a reversal coming or a curveball being thrown. Everything has been more on autopilot. Inflation's the problem. They don't want to cut rates. They will continue fighting that. And yeah, they just leave that to the open interpretation. And at the end, what wins? What wins is just a price action. So, like, let's take a look at the dollar yesterday. What happened with the dollar? Look at the back and forth we got. We got the initial move down. We got a reversal here, and then overnight we just boom went down. But if we are not staying down, we are reversing here because the dollar is a little bit sideways. So, I personally would hold off to big dollar short bets because I think if you look at the yield differential, you know, the U.S. is still sitting at the highest, followed by I think the Kiwi is pretty high as well. So I'm still surprised the currencies like Swiss franc has been sitting at the lowest of the yield curve. But you know, these are the areas where I think if I take a look at big spectacular reversal that can take place, I think it could be these currency pairs. But who knows? The timing of these things are very difficult. All you can do is just look for the momentum change, lower high and lower low. That's when you know things have changed. But as long as we continue making higher high and this consolidate, that's not a confirmation that clear yet there. Let's go back to euro. Like on a daily chart, if you notice that Swiss franc is still running, but euro, look at that. Euro looks like a better sort of a reversal trade to me. And you can see that Euro USD, Euro Swiss franc, what happened last year, we just stayed pretty negative for the most part of summer 2022. Right here, you can see that we didn't bottom out until September. So who knows when we'll bottom out here. But if you look at the daily chart, I mean, this will be a major level break. And I know if you take a look at the longer term charts, you'll be like, I have never seen that. Personally, I've never seen a trade below that. I still remember back in 2011. It got below the parity level. Let's go back 2011. It got below the parity level. Like this thing was so strong. You can see the Swiss franc was really strong back in 2010 and 11. And 11, it actually fell just below the parity level before, you know, things turn around, and then we had the Swiss franc come around and peg the euro against the Swiss franc for the at a 120 level. So you can see that big reversal happened. I mean, look at the change, percentage change. That was a 16% move. So, I don't see any central banks, especially the Swiss bank, are in a position to do that again because everybody's fighting inflation. That's a story. That's a different story here. Everyone is fighting inflation. All right. So that's the bit of a short history here, and then what happened in 2015? They removed the peg, and that thing just fell apart. After that, it has been more smooth sailing until now, where it just start to deviate once again. All right, let's get back to euro. It looks like euro is moving a little bit in our favor. Let's see if I'm not filled in yet. Let's go shorter term. My sell stop is at 110.64. But so far, I do like that price action, and any of the daily chart traders. I think this could present an opportunity if this breaks below that 110.30 area. So this is a great way. You can always start half a position and then move along, and leg in as it's moving in your favor. But yeah, these things. I think that the difference really here, these market conditions, than let's say last year, is that things are just moving very slow. Things are moving on a slower pace, but as long as you're in the right direction, you'll win. But the problem happened is that when our timeline is different, our expectation is shorter, but you might be right on the direction, but maybe not right on the timing here. All right, so it looks like I got filled here on my euro dollar position at 110.64. Again, my initial stop is right above here, 111.48, that area. And my stop, my next leg will be below this area, 110.38. If this breaks below, I'd like this turnaround here. Because again, this is where the frothiness is. This is where people have stayed. The moves have been one-sided. People have been more on that long versus short. So if there's a reversal needs to happen, I think those are the areas that we need to see a sort of a turnaround. Aussie, Kiwi, they all sitting at decent, reasonable levels, so they might just go turn around sideways. I have another question about dollar Swiss franc. Yeah, I mean, I like both euro dollar and dollar Swiss franc. I think they're both reversing nicely, especially I love the price action when you see the price action try to break below and quickly reverse, because then that establishes a nice support area. So this is always a good area to kind of look at, and yeah, I do like Euro USD and Euro Aussie and euros. So we're nicely about 10 pips in our favor here, but I realize that this if I'm trading on a higher time frame, what's my target? I need this. If it breaks below this 110.36, that's where I'm going to leg in. The next support comes here, 109.72, and the next support after that is 108. And realize that 108 was not that far long ago. 108 was at the beginning of the month. So things can go to that level. It's just a matter of time. The other pair, EuroCAD. Yeah, I do like the EuroCAD as well. I mean, take a look at this one. This thing was sideways for the most part, reverse. And here's sitting at the lows of that candle here. So I do like EuroCAD as well. Remember, EuroCAD is, you're diversifying a little bit. Instead of all dollar, we can take a look at CAD and the dollar, because the relative strength weakness. Dollar CAD has been going back and forth, but you can see that it's just trading short term in this little range here. So I like the dollar, but again, EuroCAD also in the same category there. So I mean, let's go into the dollar. You can see that a very nice reversal this morning in dollar. We had almost reversed a lot of the losses that we've seen overnight. So that's about 0.5% down. I think if you take a look at the basket overnight, this move over here, we were down about 0.58%. So the fact that we have reversed that, that's a bullish sign. So that's where we are at. So I do like some of the dollar long And I think we have euro dollar now, which again moving very nicely, sitting at the lows of that candle. And so we can also take a look at dollar yen. This is another one. I mean, big pullback right here. Bank of Japan is due overnight tonight. If they're not, again, they're not expected to raise or make any changes to their policy. And I think that's where we can see a bit of a recovery back up to the 142 and essentially break above to 143, 145. I think it's a matter of that timing. The only time yen will be rescued is if the central bank does make a change to their policy. All right, let me know if you have any other questions. Looks like we are all on the same page, which is always good. I hope I was able to give some explanation on certain things and my strategy. And again, everybody's strategy is different. So take that information, process it down, and see how it really fits your mold. Like I've said, I want to emphasize again, we are in a peak summer environment. And from July to August, the volatility likely to stay where it is. So not expecting a whole lot of change there. Hopefully, starting September, we'll probably start to see things pick up. Also, as I've mentioned, as we go into the month of August, I love to be active around news events, but I'm very much focused on these inflation numbers as we drop off those big numbers from last year. I think that's where we could see some sort of a revival of the inflation fears coming in, and maybe that will be the straw for dollar to make a bit of a reversal. But it's fascinating that the dollar has given up all of the gains from last year, and I want to highlight there. And again, this is where you got to go back in time because you have to see how prices did differently over times. Let me take you back to 2018, 2019. So 2018. The Fed started to raise rates, Bank of Canada started to raise, but nobody else was raising rates. But this is the dollar basket. Look what happened. We went up 2018, but the entire 2019, look at that range. Dollar did not budge. Dollar stayed in that wide range the whole time. So that's why, and then the COVID came and then boom, like big jump in the dollar here. But take a look at what happened so far this year. Since last year, we just gave back all the gains, and just things have kind of looking more negative than positive. We've been more downtrending, but that was not even the case back in 2018-19. And I think this all comes down to the central banks. Right now everybody's raising rates, so no central bank has an edge. Everybody's changing rates. I think this will be another fascinating thing in the coming months is that which central bank stays hawkish and which central bank stays dovish. And whenever that change happens, that's when you will see some big reversals taking place. And I think that will be a great time to be, jumping on some daily trends here. But I always say, trade the markets in front of you. Doesn't matter what it is. This is the market that you got to trade. That's in front of you. And you have to shift your strategy accordingly. Daily charts last year were great. If you caught some good trades, like let's say dollar CAD, big trades that took place last year. But this year, not so much. So you need that big trend to take that into consideration. Take a look at Kiwi CAD last year. We went from 76 up to 87, 1100 pips. Look at that reversal. So these reversals will happen, and again they will happen again, but that was a 14% run. So I still think there will be something big coming, but you just have to kind of wait for it when that happens, and that could happen around these inflation numbers. That could happen around the central banks making a change to the policy. But whenever that does happen, that's when I gotta make that shift. But if you are using a wrong strategy in the wrong time, that's what you want to avoid. You want to be in the right place at the right time, use the right strategy, because other times you'll be frustrated. So you can do the exact same thing this year and the exact same thing next year, and you will have totally different results because not the strategy that's not good. it's the markets that doesn't fit that strategy. So um, let's say, what do you think of the equity markets here? So that's a good question. So same thing goes with equities too. I mean, equity has been very bullish. You can see that we are almost back to the highs that we initially started this downfall from. And I would say the same thing right now. We talk about momentum. There's not a whole lot of worry about recession. There's not a whole lot of worry about a lot of things. Momentum is strong. Same thing like last year. Momentum was weak, so every time we rally, we just fell apart. Personally speaking, I think we had a great first half of the year, but would that continue? I mean, there's a smaller window to the upside, and there's a bigger window to the downside. So that's a contrast there. Look at QQQs. They rallied. Let's go on our daily chart. They rallied almost 46%. So are these gains sustainable, or can we turn? We can, absolutely, but I think we need to change the market narrative for it. So for now, as we are in this peak summer environment, I think markets will continue to rally. Let me just show you in a chart of SPX from 2018. I just want to show that because that year was a tumultuous year, the way it started. So back in 2018, you can see that we started off with a bit of a negativity. And you can see that entire summer, we just cruised along. We just cruised along until at the end of September, and then look the way we ended. So you can see that the summer quiet environments can be actually good for markets, but once the big participants come back, things can turn over very fast. So as you can see, where we were back in at the end of September, October, we went from that was a 20% drop from the top to low. So do I think that the markets can go a little bit higher? Yes, but you gotta know the timeline for it. And I would say it doesn't make you feel the best when you see things have already run so much this year. So eventually the pivot will happen. Maybe we'll get a bit of a blow off top. But yeah, we are sitting at a massive gains here. There's more at risk. And also you got to realize that the yields, the bond yields, 10-year, you'll hear about the bond yields, sort of the yield inversion. So US 10-year, US 2-year. Okay, sorry. I have it here. So US 10-year, 2 years, the yield, we are massively sort of inverted here. So this inversion usually, falls in with a rise in employment, and then that's when you start to see a change here. So let me see. I used to have So if you compare the bond yields, and every time in history, things start to change and shift with the unemployment rate. So if you take a look at the U.S. unemployment rate. Let's see. So look at the U.S. employment rate. Oops. All right, actually, let's go to Forex Factory here. So yeah, U.S. unemployment rate is sitting at still at record levels. So here we are. We'll have the next report here. Unemployment rate sitting at about 3.6%. You can see that we are still massively inverted here. I mean, if you go back in history, back in 07, 08, we were inverted as well. And as the unemployment started to go up, we started to see the yield start to get uninverted again. So I think the only thing that's holding this market is really this employment. So far, everything is pretty strong, and I think market probably stay on that. But when things change, then I won't be surprised that markets switch very quickly off of that. All right, just a quick update here. EURUSD looks like we're getting a little another push down here, 110.46. So up about So this is again moving very nicely here. I don't mind. I think I would like to get short here. All right, looks like it's gonna trigger my short at 110.34. I'll be legging in there. But yeah, like so far, maybe it's the press conference. They said something. But yeah, price is moving very nicely here. This is where I would bring my stop closer to break even, or like slightly above this level here. I know we started off a little bit wider, but this is where things are moving nicely in our favor. We can bring the stop a little bit closer just in case if things reverse a little bit. But so far, very good price action, and I'm looking forward to see what happens on a daily, how this closes on a daily. But look at that big reversal here. So I do like this, the way things are moving here. Let's say look at the Euro Swiss franc, see if this is a Euro Swiss franc story or is it a Euro story. So you can see that Euro Swiss franc is mostly sideways to a little bit lower. So I'm pretty sure dollar Swiss franc is moving as well. So yeah, I mean, I think these are the areas where we could see potentially massive reversals coming in because of where it is. I mean, look at dollar Swiss franc, where it was last year, where it is right now. Massive. I mean, I will be looking at some reversals, but so far, I would say that the continuation play has been a better play than reversal play. But just like last year, when the changes happen, you have to change with that market. I think that's a takeaway we can take from last year to this year. Is we had the dollar that was the strongest throughout the year, and then there was that sort of a capitulation. I mean, look at this was dollar last year, so we can say the same thing about how we are looking at certain things right now. The dollar was in the same boat last year, and then only in the late part of this part of that year is where we saw the reversal. I will be actually looking at the same thing into this fall here as well, is looking for some bigger reversals coming in. So yeah, so we'll see what happens at that time. But for now, let's continue what's in front of us. Trading around these events, I think, is still a better play. Getting decent movements here, so we'll probably continue pushing on that. All right, we're running a little bit longer here. Let me know if you have any other questions. We'll end things here. Thanks for joining me. Always nice to do these live sessions. If you have any questions, you can always reach out to me through email, ankit@mavericktrader.com. You have a great rest of the day ahead. I will enjoy your summer and keep learning. Take care, everyone. Cheers.